Barring any significant recounts or legal challenges, Joe Biden is going to be the next president of the United States. He surpassed the 270 mark by taking Michigan, Wisconsin, and finally Pennsylvania over the weekend, still holding a lead in Arizona and Georgia as well. So he could build further on that lead as those counts are completed. Now, what's been really interesting over the course of the last few days is, unsurprisingly, Donald Trump has not given up at this moment. He continues to insist that he has won the election and that these challenges are going to be successful and uncover vast amounts of voter fraud, which he has alleged not even just since the election. He has alleged this now for the vast majority of this year, once it became clear that there was going to be a lot more postal voting this time around. So despite the fact that we have seen a lot more of this kind of rhetoric from Donald Trump and his legal team and his family, the markets have been extremely calm. In fact, the markets have been extremely bullish. 4 out of 5 days last week, we saw significant gains. Wall Street ending up around 7% on the week. And even at the start of this week, the markets were opening strongly after many news agencies declared Joe Biden the winner. So it simply became a case of why are investors choosing to ignore Donald Trump's warnings? It was clear before that had this been tight that this was going to be the case, and many people were warning before that this could be the worst case scenario as far as the election's concerned. But incredibly, investors have just chosen to shrug this off on this occasion, potentially suggesting that the deficit to overcome for Donald Trump with these recounts and legal challenges is just too significant at this stage. It would take an incredible situation for enough results to be overturned in order for Donald Trump to retain the presidency. So perhaps this is the reason why investors have been so calm throughout this period. Next, it becomes a question of what can we expect from the Joe Biden administration, especially in the early days. Obviously, front of mind is in respect to fiscal stimulus. Now, it looks as though the Republicans are going to hold on to the Senate, so that poses a massive threat. One of the benefits of a blue wave initially was going to be a massive fiscal stimulus package. And it's going to be very difficult for Joe Biden to secure that now, working with a Republican-led Senate. So if we do see a stimulus package, you can imagine it's going to have to be a much more compromised stimulus, and therefore much smaller than what the Democrats and the markets were hoping for. The flip side of that is a lot of the more ambitious policies which Joe Biden was hoping to bring to the table, things like tax hikes and more regulation and breaking up the major tech firms. This is now going to be a lot more difficult now for the next 2 years. Broadly speaking, the Democrats will be happy because they've got Joe Biden into the White House, but defeats in the House and also not taking control of the Senate will be seen as a bitter blow. The other key takeaway here, which is one of the reasons why the markets may be performing so well over the course of the last week, is what all this means as far as the Fed is concerned. Now that Congress is likely to pull back slightly as a result of failing to secure that blue wave, that just means more of the heavy lifting is going to have to fall on the Federal Reserve, which means more stimulus. Last week they held off on announcing further easing, unsurprisingly, given the fact that we're in the midst of an election week. In December, though, a lot of people are suggesting now that we are going to have to see more stimulus as far as the Fed are concerned. Not only will they be armed with fresh economic forecasts, which are going to be downgraded as a result of a lack of stimulus and a second severe wave of coronavirus across the US and potentially much more economic restrictions, but they're going to know who the president is and what the fiscal response is going to be. And from what we're seeing currently, and from the comments from Mitch McConnell, Senate Majority Leader, over the weekend, that is going to be a challenge in itself. So we can expect more Fed stimulus as a result of this, and that typically has been good for these markets. What we can expect now over the course of the next few weeks is these challenges are going to continue. Trump is not going to go quiet, and he's unlikely to concede on this issue. This is likely to drag on, but rather than be a major market moving event, it is likely to just be political theatre for now. The fact remains that Donald Trump has a massive deficit to overturn, and the markets just don't see that as being plausible. So I think it is going to be much more political theatre. If he starts to make inroads, of course, then maybe we'll see these things change. But at the moment, markets do not seem to be anticipating such a move. The other big news today, which does factor into these major market moves we're seeing on Monday, is the Pfizer announcement with regards to its vaccine. Its vaccine being viewed as being more than 90% effective, and it really got these stock markets excited today. We've seen major moves. This is something where we could see a massive shift as far as 2021 is concerned. Obviously, early days is going to be taken by producing the vaccines and going to the most vulnerable people, but now hopes are that by the middle of 2021 we could see a widespread vaccine, including others of course could join Pfizer. But this announcement today has given a massive boost to the market, so it's not just the election that these markets are celebrating.